Alright guys, we back with another one, man. Alright, man. Hey, this before I even, get into all of this, man, get you a pen, some paper, go somewhere and hey bro, lock in, bro, focus up, cause this right here is probably gonna be one of the most cleanest, like this trade, like I'm surprised myself. Like I don't even know, like bro, I don't even know how to explain it, but this is GBP CHF. This is a trade I caught on here. I caught 2 entries on this. This is currently running. One of them is running a 26-1. That was my overall entry that I caught. Right, that was the main entry that I caught. That was my that had like a little. It was only a 6 pip stop, but the other entry was a. The other one is running a 51-1, and that was a 3 pip stop loss. You see, 3 pips made a huge difference from the RR, right? So that's just crazy to think about. But like right now, the max that it hit was a 51-1, and the other one hit like a 26. So in total, 78-1, 79, around there. I'm gonna go into a whole other chart, and we're gonna explain this whole thing right here. I'm gonna explain this whole thing and why this setup was so cool. Let me see. I'm gonna go back a little bit for you guys. I'm gonna go to like right here. I'm gonna go through my whole thought process of why I was looking at this and why I sold it and stuff like that. So immediately, as the market started going up, I always draw out my order flow. Order flow is, it's not structure, but it's the little structure inside structure, if you understand what I'm saying, right? Because this is a high, this is a low. So what is our order flow? Order flow is bullish right now. Why? Because let me see. Let me take this out. This is our order flow, right? 'Cause even though we are bearish, we have bullish price action. So that's order flow. So I'll make a video about that. I seen a comment. Somebody asked me to go over the difference between structure and order flow, but I'm gonna stick to the main thing of this video. Let me go to the 15-minute so you guys can see it. All right, so low, high, low, high, low, high. Simple, right? Simple. Now, looking at this, you're not even thinking on like a higher time frame scale. You're not thinking like, why is the market doing this? Immediately when I seen this, right? Immediately when I saw this, I got happy. You know what? I was like, I love this. I love this price action right here. Why? Because it shows the market slowing down. Even after we accumulated, the market started to range again. Like as you can tell, like this low was taken out here. This small low was taken out here, right? That is something so small, but it's key because you see that the market is able to break the lows. So it would have been different if the market would have went up and then kept doing this. That's a whole different scenario. But the fact that the market was able to break this little low, even though it didn't break this one immediately, it was still able to show a sign of weakness here, right? It was able to show that the market was able to come to the downside, right? It wasn't straight buying pressure, right? There was some selling in there too. That's what I got from there, right? So immediately I was thinking this whole thing is going to be a distribution. That was my thought process. I was thinking, okay, this whole thing is going to be a distribution, right? So how I like to do on this, guys, I like to make it easy. I like to just put out the little structure points for you guys, and then I like to go in and mark out the distribution behind it, right? Because that's an easier way to see it, because some people eyes are not trained to see it as easily. So I like to make it simple, and then you can put in all the parts together. All right, so let me go ahead and mark out the distro real quick. We have our buying climax right here. We have our automatic rally. Why did I put this as my buying climax here? All right. Because this high here was the climax of us buying. Why? Because we was able to break this low here. That's why. Right? We was able to break that low. So that's my automatic rally. That was beginning of the range. All right, we didn't get a secondary test. We just immediately made our up thrust. Oh, did I just delete that? I did. All right. We immediately made our up thrust. Cool. Right? After the up thrust, this is a key thing here. Once the market gets inside of your point of interest, right? Immediately once the market gets inside of your point of interest, go to lower time frames. So I'm going to play this out a little bit. All right, boom. That's all I need to see right there. So we have a 30-minute distribution. Now you go down to 10-minute, we have a 10-minute distribution. Let's look at the drives, right? 1, 2, 3. We have 4 drives. I usually mark out 3 drives, but we have 4 drives, right? So we got the same thing here. Buying climax. Automatic rally. We have our up thrust. Let me see, up thrust. We have our UTAD inside of a UTAD. And then we got our breaker structure, right? We broke this automatic rally here. Immediately after this UTAD form and we broke the slow, I was looking for a sell. The sell limit was at 270.70. That's where I had my first sell limit at, 270.70. And I had a 6 pip stop loss, which was just above the UTAD up here. That was my first sell limit, right? Just above the UTAD, 270.70. Main reason is we're in a supply area, right? Let's check off our confluences, right? We're in a supply area. We have a 30-minute distribution. We have a UTAD. We have a 10-minute distribution inside of our 30-minute distribution forming as our UTAD, right? We have a breaker structure on lower time frame on our UTAD on our fractal distribution, right? That's all the confluence I needed. That's all I needed to be able to take this trade. Immediately, right after we came down here, immediately we tapped into our first area. We tapped into our first limit. We tapped into our first, so that's cool and all. Cool. Now we gotta zoom into here. So give me a minute. Let me delete all this real quick. I know this might be extensive, and stuff like that. Sign of weakness. I know this might be extensive. I don't want it to be extensive. I'm just trying to, go in depth for you guys. I'm really trying to show you guys something here. I'm really trying to, if somebody can learn something out of this, do it, bro. Because this trade right here is perfect, right? So let's go over what we got going on right here, right? So we got a 30-minute distribution forming, and then we just have a 10-minute inside of our point of interest. Let's go. Let's see what time and price is important. We talked about this. Let's see what time this market trade inside of here. What time is this forming? This UTAD formed at the open of London. We formed at the open of London, right? Came down. What time we'll come back to test this? At the open of New York. Let's go down to the 1 minute, right? Now we're in the 1 minute time frame. Okay, so this is where it gets serious because I already have one entry that is positioned, right? I have one entry that's positioned. So my next entry has to be a fractal entry. My next entry has to be a sniper entry. I have to catch this entry inside of here. Like, I have to really focus on this. So let me go ahead and play this slowly for you guys. Markets begin moving, right? right there. Right there. That's exactly when I knew that this was going to be a distribution. Right? That's the exact point that I knew this was going to be a distribution. Because look, typically when you have a move like this, typically when you have price moving like this, even on the high time, when you have price moving like this, and then we have a sell down, usually if it was going to be a reaccumulation, you'd have a move to the upside that breaks this high, comes down, tests this candle, and then go up. If this was going to be reaccumulation, this candle here, let me show you guys. This specific candle here, because this candle has so much volume, this specific candle here cannot be broken. If this was going to be a reaccumulation, this specific candle cannot be broken. The fact that we broke this candle, this is our minor sign of weakness. That's our minor sign of weakness right there. Because the fact that we broke this creates this our minor sign of weakness. Because this shouldn't have broken. If the market was going to continue to the upside, it shouldn't have broken. And I'm telling you this because look what happens after. Right? Look what happens after. Just watch the market. Market ends up going to the upside, right? So now you're like, whoa. You feel what I'm saying? You're like, whoa, what's going on? Why is the market going to the upside? You know, we should be going down. Whoa. You know, that's where people get scared and be like, oh, man, this might end up hitting stop loss or whatever. But nah, man. Look, the market plays these games, dog. You have to just be patient. The market plays these games. So just, like, watch the market move. All right, boom, we're going to stop it right there. Right, so if this is our minor sign of weakness, let me start putting out this for you. Buying climax. Right, let me start marking this up for you. Buying climax. Automatic rally. We have our secondary test. Our secondary test ended up creating our minor sign of weakness. Cool. We have our up thrust right here. All right, now let's search out for our UTAD, right? Let's see what this creates for our UTAD. All right, boom. We have our UTAD here. And as soon as this low is broken, our UTAD is confirmed because this is the low that created our UTAD. And we already reacted off this low here. So we have no choice, right? This is exactly what I mean. Like, once we react off of here, because this is our last low that created this high, we have no choice but for this here to go to the upside, right? Like, this is another instance where I knew the market was going to continue selling because we have no choice but to go to the upside. If the market was going to continue to the upside, this should have never got broken here. Okay? And there you go. Now, what we have our major sign of weakness. Okay, one thing I noticed here was this right here. So this is why next area to look at, because after the market came up and reacted off of this, we reacted off of this buy to sell. So initially this is a supply, right? This is a demand turned into supply. Like I've explained in my recent videos, once you have a reaction off of a demand area, which is here, and it ends up failing, this reaction turns into supply. So this is our supply. So this reacting inside this supply, what does it become? Supply. Okay. So I'm gonna delete that. My entry, I'm gonna just cut it short. My entry was I was doing the 50% of this area here, and it was like right here at the 30. That was it right there. That was my second entry at the 30 here, and my stop loss was 3 pip stop loss here above this high. Now we have two entries, right? We have this first blue line, we have the second blue line. Let me let the market go and react off of this. Do not get faked out by these accumulations. Don't let these accumulations scare you out of the market, right? Just because we're accumulating here does not mean we're not going to sell, bro. You have to understand the purpose behind some accumulations. Some accumulations are just to go fill some certain areas, right? Every accumulation is not just going to go run a new high, right? You have to understand that. That's one key thing here that I'm going to explain in a later video. That's something that's key to the T. And I mean, the rest is history, bro. The rest is history. The rest is history. We're just gone after that. So that was my second entry. All right, so now we're back on the 30-minute, right? And the market's going down. All right, we got our two entries here. The market's going down. And look what happened. We broke this right here. So after that happened, our whole 30-minute distribution is completed. This right here is confirmed. Our 30-minute distribution confirmed. We got a 10-minute distribution here, and then we got a 1-minute distribution inside of here. So, man, the fractional nature of the market is crazy, dog. The fractional nature of the market is crazy, right? So I'm gonna go back to the other one to show you what I'm looking for next in this market. All right, so we're back to real time. I don't know how much times I've used this scenario in this video, but this area is demand. We had a reaccumulation. We had a reaccumulation inside of here. We had an accumulation inside of here. So this area was demand because I was actually trying to catch a buy in here, as I said before, and we actually reacted inside this area. Now we tried to accumulate inside of here because I remember it was during New York that one of my buddies was sending me accumulation on lower time frame that was happening here. The accumulation failed. A failed accumulation is just redistribution. So we know that this area reacted off of this demand, so this demand becomes supply. So this is our next supply area here that you look for entries in. So right now, this is the current order flow that's going on. Simply, what you could do here, if you want to be smart, you could hedge this, right? Because this is already looking like it's trying to accumulate with these little lows right here. I can just tell. Once we break this high, you find the entry down here, and then you take it up here, right? You can hold this buy and try to take a sell here if the sell presents itself, right? And you go to the downside, and then you can close out this buy. Or if we end up reaccumulating here, going to the upside, then it's cool. You're in this buy, right? So it doesn't matter, react off the market, play what the market's giving you, dog. So, and that's GBCHF, man. That is GBCHF. Very clean, very clean.